Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having a phenomenal day. Let's take another look here at Bitcoin, see what's going on. All right, back under 60,000. This is probably temporary, but we got to double check a few key factors. Our CME gap got completely filled. Take a look at this. Almost rocket science. It peaked up just a little bit higher there to that 63K mark, but pulled back. The new CME gap has since been filled, so Bob's your uncle, we're all said and done there. So at this point here, we have no more gaps, so to speak, to kind of consider, which basically just implies the price could fly, honestly, in either direction. So we're going to double check a few other things with liquidation, kind of see what's going on. So welcome aboard if you're new. We actually got a lot of new members, not just to our Discord group, our premium group, but also to our YouTube. So thank you again so much for those who've been liking the videos, trying to get this in front of more people. And also, of course, those who have been recently subscribed. I think we got a couple hundred this week, which is really nice. Very, very cool to see that. So welcome, welcome, welcome. Let's take a look here. If you're not familiar, just to kind of give you a heads up, we do like to look at liquidation levels first, kind of see where the incentive is for the price action to push in either direction. This isn't exact science. This is not something that's like, okay, we have liquidation here, it's going to go right there because of this one thing. But it does tell us and kind of reaffirm some resistance or support levels. And when we looked at this yesterday, 63,000 is that level that's still present. We got about 10 to maybe 12 billion. Sorry, well, yeah, each one of these is about 5 or 6. So yeah, we're looking at somewhere in the range, just say a rough estimate, $10 billion in liquidation at 63K. That was there before and it didn't officially get swept because once again, those areas are resistances. And why? Because they're usually based on local supports that switch or essentially are broken and become resistances. Anyways, the whole point of this is to kind of help teach you and help you understand that liquidation events occur at key levels. And those key levels are generally places in which we're going to see the price action have a lot of interest, okay? So that being said, it's really common for prices like this, for example, to wick up and then to just come right back down as if it never happened, okay? It's exactly why we saw the CME gap get filled. It's another form of liquidation. All right, so let's take a look here at the daily time frame, kind of work our way down, see what's going on. We do, again, have this descending broadening wedge here, and there is jokes in the community that we could see more chaos and the price jump up and back down to 40K. I wouldn't be surprised at this point. Honestly, you can't rule it out because it's a very nonsensical market in a lot of ways. But the one thing that's consistent that does make sense is the greed that's very present. So we can kind of almost guarantee that that's a very real thing here. So if we do take a look here, just say we remove this, overall sentiment is that we do still have potential for one more leg up if you look at the larger waves that have been effectively happening based on, again, a theory. Keep in mind, Elliott wave is strictly a theory. If you trade solely on this one thing, you're going to probably lose out on a lot of intraday or smaller time frame stuff. I'm familiar with, I think some of my community members, they follow other YouTubers or influencers that only use Elliott wave. So I think that's just, I think it's limiting. So just be mindful. It's important to kind of use more traditional indicators in conjunction with that. And I think that increases your overall success rate. It's just me personally thinking over the years here, honestly, I've looked at Elliott wave a lot and it's a very good quote unquote theory, of course, but it's exactly that. It takes a while to happen sometimes, right? And what we can see here though is that instant rejection off 70 in the RSI. Sorry, I misspoke. That's 50 in the RSI. Commonly an area of consideration for the price action and where it's going. In other words, if we see here in this past, when we broke above 50 in the RSI, that was this guy right here, we spent some time above in bullish scenario, okay? Now it broke down below 50 in the RSI right about here, we've been bearish. So generally speaking, while this example is not perfect, you can usually see the price action doing well when it's over 50 and poorly when it's below. So at this point here, being below that level, we can respond to the fact that that's probably a resistance level. In a more likelihood here, that kind of reaffirms that resistance range at 60 to 62K, the previous CME gap here, which we can go ahead and update that as well. So all in all, we're in a situation right now where we got to respect the fact that we're still under some key level resistances. Some of those are moving averages. In fact, all of them are moving averages. If you take a look here, we have this inception point at 62K with a price action, even though it wicked above, it's still closed below on the daily. Basically tells us that the bulls were very strong yesterday. There's no doubt about it, a good 10% day. But at the end of the day, they couldn't break through those moving averages. That's sensible, that's normal. That happens the first time you try to break through them. Again, it's not exact science, because you look at the history, you'll see that these moving averages, they go above and beyond all the time. It doesn't necessarily matter too much. So I don't put a ton of weight into moving averages, but I can say that with all of them kind of hanging out at the same place, we're going to see some resistance here in the 60, rough estimate 62 to roughly 64K mark. And that makes sense considering previous points of control and some other areas we've identified. MACD is trying to converge, but it hasn't fully yet. Stochastic starting to taper off, which kind of implies that we're losing that little momentum, but it's normal when you see a bit of a correction like we are seeing today after a monumental push up yesterday. So again, interesting stuff. The market never ceases to amaze me. If we take a look here at the 4-hour time frame, we can see stochastic swinging down. That's generally momentous trend to the downside. That's natural though, folks, because we had such a strong push to the upside. It plateaued, and now anything that happens is just gonna slowly taper off. So again, that indicator isn't all that foolproof based on the simple fact that we can see the price action pulling back, right? It's kind of normal considering what happened. Either way, we're over 50 on the RSI on the 4-hour. To me, that's still a very bullish sign. We're over the 20 and the 50-day SMA as well, which I do hold those in slightly higher regard, just based on this being a transitionary time frame. And me personally, the 4-hour time frame is, if I were to trade only on one time frame, if I had like my hands were tied, so to speak, I could only choose one time frame. The 4-hour time frame would be it, mainly because it speaks very well to transitions from micro movements to macro movements. It pretty much tells you what's going to happen next in a lot of ways. And with us being above that moving average and above 50 here, even though MACD and the stochastic RSI are swinging down, I still think we're going to see a decent amount of support coming up here. So in that regard, let's go ahead and let's update our fibs here and kind of see, because this 0.5 fib level, actually, before we update anything, just to clarify, this 0.5 fib level is a distinct likelihood of being a support level. So 59.5 is probably one of those areas that should hold, because again, it's kind of aggregating itself with these other moving averages. But if we were to kind of just say remove that and hypothetically look at this current retracement period where the price action pulled up here, we're going to see that roughly 55,800 is that next level, that 0.5 for this more recent increase. So the price is topped out essentially at 62,700. Then we could very well see 57.5 and 55.8 as the next potential areas of retracement. But again, you can see this here, 0.236 hanging out right there at that previous 0.5. So a lot of times when you stack different type of fib levels on larger and smaller time frames, those areas are a little bit more secure. So me personally, if we lose 59.5, I would think that these other targets are likely, because we do have a decent amount of fair value here as well, right in this range, which is a pretty substantial amount of value. Again, fair value gaps are very similar to CME gaps. They're just not like a candlestick close or open. It's more so just the entire body. In other words, this whole entire period from 57.7 to 59.1, there is no retracement or consolidation, no profits being taken in that area. So that increases the odds of that area getting swept, just like we saw the CME gap more recently here as a pretty profound and obvious area of consideration. So again, just some things to kind of be mindful of. This is not, again, exact, but these are absolutely things that kind of increase your odds of success. So me personally, just kind of throwing out their dollar cost average targets. I'll update our playout chart for our Twitter, Telegram, Discord. If you're not familiar, I do post playout charts here, kind of giving you certain scenarios here for different coins that I cover. I'm going to update this and make sure we reflect that, but 59.5, 57.5, and 55.9, I'm rounding up a little bit on those. Those are some key areas we want to kind of pay attention to moving forward if the price doesn't end up pulling back. We did actually short Bitcoin with success here recently. It was kind of a messy one where we had to update our targets because it continued to run to the upside. But exactly why we average into our position. So we have 3 entry targets, 60,000 essentially, 61.3 and 63,000 if you round up a little. And then I adjusted our take profit target at 60,000 because that's the new bottom, at least for now. We have to respect the fact that 60,000 being at psychological resistance from before, or at least should have been, is now the psychological support. Okay. Again, round numbers, substantially large round numbers, are extremely common in trading. You'll see those numbers consistently getting hit. Okay. Ichimoku Cloud hourly time frame. Everything looks fairly bullish here, but we got to recognize lagging span's getting really close to price action. That's usually the first indicator to kind of consider securing profits. If you took a long from 55K and you're still holding a long right now, I don't know. I struggle with the fact that people don't take profits and they try to moon everything. So please try not to be like that. You got to secure profits when you can. Obviously, everyone has a different risk tolerance, but you're probably a good 10 to 15% up on a spot trade. If that's a leverage trade, you're even higher up. Try not to get too greedy. This market does not allow that. At least it's hard to be sustainable and be greedy at the same time. The conversion line and the baseline are getting close. That really just implies that we have more continuation potential for the price to pull back. We're losing that momentum, obviously. But the actual cloud itself is hanging out between 58.5 upwards to 60.5. So we got a $2,000 range here of support. Once again, we close below 59.5, my personal opinion. We will probably see the price action pull back to these lower fib levels. All right, so that's kind of what we got here. Overall sentiment isn't bad. I just, I wouldn't expect the price just to go on another rally here, especially heading into the weekend. Fridays are notoriously profit-taking days for the majority of the market. And those are probably not people like you and I. But if you get in that habit of doing that, it might be advantageous, right? So again, I'll post a playout chart here in our Twitter, Telegram, and Discord here soon. Just kind of, give you some perspective on my thoughts on where this coin might go next. But I do want to say thanks so much again for watching. I hope you learned something. If you want to become a better trader, CryptoCache.tech is the site. Link down below. Join us over at Bitunix as well. I got an exclusive campaign going this month here for our community. No KYC or VPN required. They're awesome. Awesome exchange. Highly recommend checking them out. I do hope you all have a good rest of your day. Thanks again so much for your time. We'll look forward to seeing the next one. Take care.